Well, hello everyone, and welcome to our Tuesday, April 27 session in our series of seminars about entrepreneurship and Asian high tech. I'm Richard Dasher. I direct the U.S. Asia Technology Management Center at Stanford. We're very happy to put this series on with the support of the 23 member companies of the U.S. Asia Technology Management Center's Industry Affiliates Program. So we have shared some slides before the program started about this. Would happy to answer questions for anyone who has more interest in learning what we do when we're not giving seminars. Today, I'm very happy again to welcome back a former student who I've had the privilege of knowing for a long, long time. Mr. Alex Liu is the founder and CEO of two companies in the fintech space, Amis and also MaiCoin. And before that, he was director of marketing for Qualcomm in Shanghai, China, where he was overseeing a $30 million a year product line and helping to usher in cable modem standard with the Chinese State Administration for radio, film, television. Alex got to Qualcomm by being acquired. He was with Atheros Communication for 7 years, which was a semiconductor startup that was founded by Professor Teresa Meng at Stanford. And John Hennessy was the chairman of the board. He's held roles in engineering and electronics in Korea, with Siemens and with Samsung in Korea, with Siemens in Germany, and with Hitachi in Japan. He's got both bachelor's and master's in electrical engineering from Stanford, where he was a President Scholar and also one of the 12 fellows 1 year. This is a highly competitive program that gives Stanford students opportunity for experience in venture capital funded startups. He holds two U.S. patents in digital wallet security and also exchange rate risk mitigation. Get that right. So Alex, we're delighted that you can come and talk to us a little bit about what's going on with your life, as well as how you're developing in Taiwan, and most interestingly, what's going to happen with blockchain in East Asia as we move forward. So Alex, the floor is yours. Let me just hand it over to you.
Thank you, Professor Dasher, for that fulsome introduction. It's really both my privilege and my pleasure to be with you guys today. Some while back, a few decades ago, I was in the audience for many of these Tuesday seminars, and here I am. I'm not sure why I'm qualified to tell you about this stuff, but I'm going to do my best to give you my perspective on blockchain and related industries in this part of the world, sitting as I am in Taiwan. So let me share my screen. All right. Please feel free to make this interactive. So I'm going to spend about 30 minutes going through the slides, but anytime you have a comment or a question, please just.
So Alex, let me interrupt and say that the best way to do that is to give us a heads up in chat.
Okay, all right.
Because if we get the heads up, we can see it over in the chat box, and then we know somebody wants the floor.
Right on. Okay, so let's get started. As Professor Dasher mentioned, I am an alumnus of Stanford. I spent 6 years there as an electrical engineering co-term, during which time I also studied abroad twice with the Bing program, in 1999 in Japan and in 2000 in Germany. And I did respective internships with Hitachi and Siemens while I was there. I'll give you a preview of what I think my biggest takeaway or learnings from Stanford were, because that has a direct impact on my subsequent decision to start MaiCoin, to get involved with this industry. I think that what I'm most grateful to Stanford for is having the opportunity to see the world from both a mainstream perspective. It's fair to say that Stanford is a very well-established institution. Yet, for whatever reason, as a student there, we were exposed to many, you can call them crazy ideas. And the ability to sort of see both worlds at the same time and make sense of it, I think has served me well and has served legions of Stanford entrepreneurs well as well. So that really is something that I'm eternally grateful for, and it came from my 6 years at Stanford. A little bit about the business that I've spent the last 7, almost 8 years building. Collectively, it's under the umbrella of the MaiCoin group. It was rather the first and remains the largest digital asset, meaning cryptocurrency brokerage here in Taiwan. We basically have followed a path that CoinBase has followed, which was to start with a brokerage. Later on, we spun out, or rather started an actual exchange where you can list orders that get matched. We also, as Professor Dasher mentioned, started a enterprise blockchain company called Ami, the French word for friends, but it's also the name of an Aboriginal tribe here in Taiwan. And around the same time, we actually started a hedge fund in Hong Kong, which has a few licenses to actually manage and advise on digital assets, such as Bitcoin. Let me give you a condensed version of our genesis story. So it goes actually back to 2013, the spring of 2013, right around this time, 8 years ago. I was having lunch in Shanghai with another Stanford alum, Bobby Lee, who I think has spoken to this audience before. And over lunch, he proposed to sell me something for 400 RMB, which is about 60 something US dollars. And he told me to download a piece of software, and it took about 3 days, but I finally received my first Bitcoin after the full blockchain was downloaded into this wallet. As an engineer by training, I spent about 3 nights, 4 days, just looking over the source code, reading the white paper, really just falling into this rabbit hole. And when I realized what was really going on, how I actually received my first Bitcoin from Bobby, almost simultaneously, I came to the conclusion that the mainland China government would not take lightly to such a technological phenomenon, especially because it had such a direct linkage to financial transactions. Usually the way people buy Bitcoin is using fiat money. And so while Bobby tried to convince me to stay in Shanghai to start an exchange with him there, I told him in these exact words in May of 2013. I said to Bobby, what you are proposing is not a technology business. It's not even a business in like a financial services business sense. What you're proposing to do is actually a political activity. And people with your or my backgrounds are not the ones to conduct this game well on the mainland. And that's what actually informed my decision to move back to Taiwan, where I was born, and I only spent the first 2 years of my life to start MaiCoin. And the thesis was that although Taiwan is, of course, a much smaller market than the mainland, but that over time, because of the societal conditions, perhaps even political conditions here, that we would be able to forge an environment which was, at least at the minimum, not prohibitive of this line of business, and in the maximum, perhaps even encouraging. And so the subsequent 7 years have more or less borne this theory out. The most definitive proof of this was the action by the Beijing authorities in September of 2017 to formally prohibit, to ban businesses such as ours or such as CoinBase as they have in the United States. So in some ways, I think that our entire development, including establishing these various separate companies, which are subsidiaries of the MaiCoin group, was just a recapitulation of that original thesis, which is grounded, ultimately in a technical understanding of how this technology works. I'll explore a little bit about how the mainland government itself is trying to harness this technology in the subsequent slides. But you know, what I said in the previous slide about Stanford, you know, equipping me to kind of see things both within and from without the system, I think in this case came in quite handy. So, you know, this timeline are just relatively minor details in that grand narrative. For those of you who have used CoinBase, you know, you'll find our services to be quite easy to understand. So MaiCoin is focused on ease of use. We allow fiat currency purchases, which in Taiwan means the Taiwan dollar. We even allow you to go to 7-Eleven, of which there are 6,000 separate you know, branches here in Taiwan to purchase cryptocurrencies. So you can literally go to 7-Eleven to buy Bitcoin. Whereas its cousin, the asset exchange, is a bit more of a professionally oriented platform. It allows you to list orders, which may or may not be fulfilled. And they get matched, you know, bids get matched with asks. And the benefit here is primarily that the spreads, the fees that we charge are much lower than on the brokerage side. And then AMI is actually a joint venture with a few financial institutions in Taiwan, but also with the SBI Group out of Japan, which is a listed financial company there. A few years back, we did some technology, pretty fundamental technology work in conjunction with JP Morgan, which was exploring a so-called enterprise or permission version of blockchain where the participants, the nodes, have to be permissioned. They're usually financial institutions. A version of this technology was proposed by Facebook under the Libra project, now called Diem, to conduct cross-border payments. But as we have seen in the news, Facebook has encountered many regulatory hurdles to actually roll this permission blockchain out. And that's indeed what we've experienced here in Taiwan. Without putting too fine a point on it, there are a lot of vested interests which would be threatened if such a thing came into being. We'll go into that in a bit more when we talk about what China is trying to do with this and what the US response is. Now, I mentioned the thesis going back 8 years now about Taiwan, you know, over time, becoming quite a friendly jurisdiction for digital currencies. And, you know, as one piece of evidence there, I want to point you out to this 5-story retail store that we've got in the middle of Taipei, which, you know, lo and behold, you can walk into and open an account. And, you know, on the second floor, we have a lecture hall. We hold events there quite often. And this is in full view of the regulator, which is literally diagonally across the street. So, you know, what I told Bobby 8 years ago, I mean, literally, I mean, you could not pull a stunt like this off anywhere on the mainland. But here we are in Taipei doing exactly that. And what do I attribute that to? I mean, you know, if the analogy is the tortoise and the hare, I think that the mainland in many industries, including cryptocurrencies, is obviously the hare, right? It's the first out the gate. It may not have all the details worked out when it does, you know, leap out the gate, but there's no doubt about the dynamism and the speed of execution that mainland companies have. Taiwan, by comparison, is very much the tortoise. Well, you know, in that fable, we know who wins at the end of the day, but I think the jury's still out on this one. I'm not jumping to any conclusions. What I am trying to say is being the tortoise actually has its own advantages because you can kind of look around, you can try to avoid pitfalls. And as long as you really don't get sideways with the regulator, you know, you're allowed to exist. And as a business, if you're allowed to exist, theoretically, you can make money at it. And so that's more or less the journey we've experienced in the last 7 years of operation here in Taiwan. In the previous timeline, in that timeline that I showed a few slides back, you know, I should add that in the 2014 and 15 timeframe, we were experiencing tremendous difficulties. My co-founder, who is also a Stanford grad, he left to start his own business. we were basically out of money, and the market here in Taiwan was just not picking up. Whereas at that time, Bobby was doing, roaring business in Shanghai. Okay, but here we are. We're in a much better state now, and unfortunately, Bobby's no longer allowed, literally, to operate his business in Shanghai. So, the jury's still out, but so far so good. Here we are, 7 or 8 years into this adventure. And as
Alex, can I interrupt you with a question or two?
Yeah.
So right now, MaiCoin is part of the MaiCoin group. Is that a publicly traded company, or what's
not yet? Not yet, but funny you mentioned that. I mean, we were obviously inspired by Coinbase's listing, a few weeks ago, and we're
so I understand you probably shouldn't say any more.
Yeah. but to the extent that we're like a miniature Coinbase, if you will, sure. Have I thought about listing? I have. The business is in good shape. The regulatory environment is relatively friendly. I think Taiwan's government and regulators would love to see a success story of a local fintech startup listing on NASDAQ, right? So yes, it is something we're exploring, and I'll leave it there for now.
So another question is, what happened after the exchanges closed in China on the mainland? Were you able to pick up currency from China coming over to Taiwan, or is that something not to talk about?
Right, not in any direct sense, because obviously the mainland uses the RMB. Whereas the primary currency.
But there was a lot of Bitcoin inside BTCC that Bobby was in charge of.
There was, and almost coincident with the shutting down of mainland exchanges was this whole ICO phenomenon, call it a bubble if you wish. And so we saw basically a lot of diversion of ICO activity. All of a sudden we got all these teams landing here in Taiwan, pitching their ICO projects and so forth. So that we did see in this 2018 timeframe. So late 17 going into 18, there was a lot of that, and it wasn't always the most healthy type of activity, to be perfectly honest with you. But did it contribute to kind of an upswell of activity in the sector? Certainly.
Okay, thanks for letting me interrupt.
No, not at all. And as further evidence, this is an example close to my heart, because I enjoy running. I won't say I enjoy running Ironman. I derive satisfaction from doing triathlon. How about that? So, just this past weekend, we sponsored an Ironman here in Taiwan, and we were the first. Ironman being a global brand and franchise, we were the first, blockchain company to sponsor such an event, and it was in the southern part of Taiwan. On the beach. So anyway, a bit of fun. I want to a little bit of serious business here, because I did spend some years in Korea. I enjoyed my time there very much. I've had the opportunity to do a little bit of compare and contrast between Taiwan and Korea, which in many industries, not the least of which is the semiconductor industry, are often compared with one another. I want to draw a correlation and not any causal relationship. I simply want to draw a correlation between monetary policy, which is under the purview of central banks, and societal development. Okay, it's a pretty loose argument, but just bear with me and see if you see anything there worth remembering. So compared to Korea, well, let me preface it by saying that Taiwan, even though of course it's an ally of the United States, has been called out by the US Treasury Department as a currency manipulator. It has not yet been penalized as such, but it's been called out as such. And primarily it's in the direction of the central bank in Taiwan intervening in the markets to weaken the currency, the Taiwan dollar. Okay. In comparison, Korea has not been called out nearly to the extent. So if you just look at the stats, you'll see perhaps why. So if you look at the last roughly 10 years of exchange rate history, you'll see that, the Taiwan dollar has been maintained in a much narrower band than the won. You'll see like maximum of 10% deviations, whereas the won, looks like 20% kind of full scale deflection there. So the won has been more volatile. And the reason is because, well, if you look at central bank interventions, they've been on a smaller scale, especially considering the fact that the South Korean economy is roughly twice as large as the Taiwanese one. Okay, so the U.S. Treasury's observations are grounded in certain hard statistics. What does that mean for society? And this is where my argument gets a little bit fuzzier, but I think anecdotally, see if this makes sense to you. Taiwan for the last few decades has remained rather a sort of manufacturing centric sort of, efficiency, low cost, base. Whereas Korea certainly has advantages and strengths in manufacturing, but at least in the last 20 years has flowered in many other fields of endeavor, culture. I enjoyed the Korean movie a few years back that won the Oscars, and that's been evinced in the median income, right? Where you see this stagnating line that represents Taiwan in the last, in this case, 40 years. 40 years ago, incomes here in Taiwan were actually higher than in Korea, whereas these days, whatever that number is, it's 2.5 times actually higher in Korea. What I want to do is just draw this correlation, right? I won't point one way or the other, like what's causing what, but there's been a groundswell of criticism within Taiwan to say that this insistence by the central bank on keeping the Taiwan dollar cheap has essentially impacted society by sending a very strong signal to say, well, manufacturing is the one and only thing we do well, that would lead to prosperity, and as such, don't think about other things, whether it's internet and software companies, whether it's, creating Oscar-winning movies. And so this is what makes my business here, which directly involves currency and exchange rates, in this case, between the Taiwan dollar and cryptocurrencies, so poignant and so meaningful to me. I've had my conversations, is the polite way to put it, with the central bank here. And, I see this front and center. So, my business is essentially bracketed, on the one hand, it's a relatively permissive and friendly environment compared to the mainland. That's what allows my business to exist and to some extent thrive. But on the other hand, I'm bracketed also by the central bank, which does kind of look over my shoulder from time to time, and from time to time tells me what I can and cannot do, in particular what I cannot do. So, that's the sort of little quandary I find myself in. It's not a bad one, don't get me wrong, but monetary
Alex,
policy
I think that's a really interesting, comparison that you make, because the reason that, the US complains about apparent currency manipulation, it amounts to industry protectionism, right? It makes the costs lower for the existing manufacturers. And whenever you...
Hey, Professor Dasher, you dropped out there. Hi, you guys still there? Can you hear me? Hello?
It's fine.
It's
It's fine.
Okay, I lost Professor Dasher there for the last 20 seconds or so. So, yeah, there's definitely the macroeconomic impact of monetary policy. It benefits certain sectors, it discourages others. I guess what I was trying to get at is more of the societal impact that, it does literally, it turns the rudder on the development of entire sectors of society. And in Taiwan's case, I'll make a sort of normative judgment here and say, not for the better. you know? And so, yes, we have TSMC, and it's obviously doing well, and it's quite pivotal to the global semiconductor industry. But, you know, what do we lose in order to nurture a TSMC? I guess that's the question I'm trying to ask here. Okay. Let me turn.
So Alex, if I can ask you
Yeah.
to go ahead.
Yes.
How does this fit the role of brokerage like MaiCoin?
Well, I'm simply trying to open. I mean, am I as a business owner, am I trying to make a buck? Sure, you know, but I'm also trying to open people's eyes here in Taiwan to alternatives, alternative ways of organizing financial systems, alternative ways of looking at the world, to be perfectly honest with you. And so, to the extent, you know, when all is said and done, when I leave this business, you know, I'll measure my own impact, not just, you know, in the traditional profit and loss sense, but also, you know, did we appreciably move the needle on, you know, this conversation, which is, you know, what was Eisenhower's comment about the military-industrial complex? It's something about unwarranted influence, right? In this case, I'll say that you know, the central bank here in Taiwan probably has unwarranted influence over the entire direction of societal development. So, is this being recorded? Don't tell them this, but all right. You know,
we can do some editing if we need to.
Yeah, right. Please cut that part out. No, I'm just kidding. They know how I think, and you know, frankly, they know I'm right. So whether they're going to do anything about it or not is another matter. Let's turn our gaze to you know, the broader region where I'm sure you've read in the news, but the People's Bank of China is very aggressively pushing a RMB digital currency. Now, it's not a digital currency in the sense that Bitcoin is a digital currency. Bitcoin is a permissionless system, so anyone could participate. But that's not true of what the PBOC is doing. The nodes have to be essentially permissioned entities, primarily banks, of course, but also internet companies such as Alipay, such as WeChat, which is Tencent. Now, I think it is worth asking the question why the PBOC is pursuing this with such alacrity. Let's just not beat around the bush, okay? It's basically to dilute the role of the US dollar and the US dollar payment system in the Chinese economy, but in particular in China's global trade, okay? Well, why would that be? Well, I think there's two easy to identify reasons. It's number one, the very expansive monetary policy that the Federal Reserve has pursued probably since 2008, but in particular since March of 2020, you know, in the wake of the economic difficulties generated by COVID. So as either the number one or number two holder of US dollar debt, the PBOC obviously is disadvantaged by, you know, a very low rate monetary policy, okay? So I think that's reason number one. Reason number two is because of, well, the political, how should I say, friction, I guess, between the United States and China. And in this case, in particular, starting with a few hot button issues, the US has begun to exercise, well, some financial sanctions, let's put it that way, against certain parts of the China government. And so this is usually executed through the interbank payment system known as SWIFT, which is heavily influenced, if not outright controlled, by the US Treasury. And so China obviously wants to sort of route around that. So I think that's the broader point, which is at its core, what blockchain technology is a financial settlement technology that is censorship resistant in the way that the internet itself is censorship resistant. What do I mean by that? Well, sure, China can erect a great firewall, but it's unable to police or censor the entire internet because of its decentralized nature. That has not been true of financial systems prior to blockchain technology. And so for the same reasons that China doesn't like Bitcoin, because Bitcoin is resistant to censorship, China is actually trying to use many of the core principles of blockchain to route around American censorship of the financial system. So, it's just highly interesting and ironic, how the world turns, right? But this is exactly what's driving the digital RMB project. Now, there are some superficial reactions coming out of the US government, in particular from the Federal Reserve, but even some intelligence parts of the US government. I mean, they viewed this very active effort by the PBOC to essentially route around the American dollar and the dollar denominated payment system as, a threat to national security. Okay. I'll say for what it's worth that that's probably a bit hyperbolic. I mean, to the extent that the US doesn't quote unquote abuse its power, there's going to be less motivation to move out of the US dollar, because the US dollar remains the dominant reserve currency and settlement currency. It accounts for almost half of global trade. So it's an active situation that the US is very much a part of. So it's not just the PBOC, doing something nefarious, right? It's shaped by America's own actions. I'll tell you what I think America's ultimate trump card is in the ensuing section discussing stablecoins. But for now, as part of the broader US-China narrative, there is this thread of that narrative, which revolves around sovereign currencies and payment systems. All right, well, here we are in Taiwan. We're just, watching the two giants dance with each other, and we think it's quite interesting. We hope we just don't, get squeezed. But let me talk about stablecoins, because whether it's the permissioned version, which is what the PBOC is pursuing, or the permissionless system, which many exchanges such as ours use, it's a very big phenomenon. The permissionless version works something like this. So there are blockchains such as Bitcoin, such as Ethereum, and a number of others right now that are permissionless. And what you're able to do is issue essentially your own coin on top of this blockchain. The most popular one is Ethereum. It's a simple matter of uploading and executing a smart contract that stipulates how many of this new currency you want to issue and all other aspects of your monetary policy. But unlike Bitcoin, in this case, a stable coin is linked to bank reserves. So if I have $10 in the bank and on the Ethereum blockchain, I issue 10 tokens, and I claim that if you produce the token that you can redeem $1 US, or if you present me $1 US, I'll give you a token. Well, as long as you believe that the $10 is there, there should be very little question as to what each token is worth, $1 US. Okay, that's essentially how stable coins work. They are basically a facsimile of bank reserves, right? The question then becomes, why use this permissionless blockchain as opposed to just using the bank payment system? Well, from a consumer perspective, I think the answer is clear. If you've tried to move money across borders, many of you will know that it takes many days. The service fees are usually on the order of tens of US dollars, irrespective of how much money you're trying to move. And so it's not a very good user experience. Whereas on a blockchain, moving money across borders is actually the natural state of affairs. In fact, borders have to be reinserted through anti-money laundering regulations, KYC regulations. And so there's a native state of borderlessness that's very attractive to both legitimate as well as illegitimate players in the world. At the same time, because it's backed by dollar reserves, the value is fairly stable, especially when compared to something like Bitcoin. So in some ways, this is almost the perfect form of money. It has the credibility, that's the price stability of the US dollar, the credibility of bank reserves, and the liquidity, the ease of use and transfer of cryptocurrencies. And that's why we've seen such explosive growth in stable coins over the last few years. On the right-hand side, you'll see some issuance amounts. Now, in the grand scheme of money markets, $20 billion of issuance is a drop in the ocean, right? But for where it is right now, stable coins already represent, the most frequent form of transaction on permissionless blockchains such as Ethereum.
Hey, Alex.
Yes.
If I could ask, so just one of the areas where we've, I've heard an issue with cryptocurrency is really its ability to scale with volume, in particular transactions per second, given the nature of a distributed ledger and everybody needing to come to a consent before a transaction could be processed. How do you see that in terms of either a challenge or something of an opportunity for the digital currencies to become, I guess, a bit more prevalent in moving money overseas and adoption?
Yeah, so no doubt that's an issue, as you point out, because of the decentralized nature of the ledger maintenance and the need to come to consensus. I mean, there's a sort of computational and therefore energy as well as time overhead, which is simply not there in centralized systems. But you know what is also like that? The internet itself. And so, when I was at Stanford, I remember watching, lectures online, and, it was a little tiny little H.264 screen. And those were packet switch networks that media was being delivered over packet switch. And the thinking in those days was, there was still a kind of a reasonable debate, is packet switch going to be able to scale to deliver, high definition video? Well, here we are in 2021 and we can watch 4K videos over YouTube, So what I'm trying to say here is that there are already very active technology projects, so-called layer 2, it's kind of roll-up technology, which in a simple sense is batch processing. It's collecting a bunch of transactions before you commit to the layer 1 blockchain. You sort of have a interim cryptographic proof that these layer 2 transactions are valid until proven otherwise. But the same trajectory, I would say, that we've traced with internet bandwidth in the last few decades. I mean, I think we'll see with respect to the throughput and ultimately the efficiency of blockchain transactions. So I have confidence, in other words, in the ability of engineers in this area to solve this problem. Does that answer your question?
Yes, thank you.
Yeah, and what I'll add is that permission systems, such as what Facebook proposed, such as what the PBOC is doing, such as what we worked on with JP Morgan years ago, because they are more centralized, they have fewer nodes, they're permission nodes, they can transact more efficiently. The consensus is much simpler to achieve. Sorry about this, I'm gonna...
You're too popular.
Yeah.
Alex, while we're there, we've got a question from the audience from Prakash about the monetary authorities being worried about capital market openness with crypto, saying that crypto will be unmanageable. Now, it is true that if you've got stable coin, the coin is connected, pegged to a US dollar asset, but that has to be guaranteed by some private sector entity.
Right. So that's a very good segue to the next slide, which is what I think, wittingly or not, and honestly, I don't know whether it's some sort of master plan out of Washington, D.C., or it's just, a free market dogma that translated into something brilliant strategically. I honestly don't know the answer to that. But over the last 6 to 9 months, there have been a series of regulatory rulings coming out of the Office of the Comptroller of the Currency, which is under the Treasury Department, that I think, is going to cement the dollar's role in global payment systems sense for the foreseeable future. Let me start with what they came out with last summer in the July timeframe. So the OCC basically opened the door for financial institutions to custody Bitcoin, meaning, to the extent that they custody your US dollar and, your brokerage custodies stock for you, they can now custody Bitcoin, which was a really big deal. And that's why, in my opinion, PayPal felt at liberty literally during the same month to say, hey, you can buy and sell Bitcoin now in PayPal. PayPal is a regulated, payment processor. OCC said this, thumbs up, right? So, and that kind of opened the floodgate for a bunch of other, like Mass Mutual, which is a very conservative insurance company, to buy $100 million worth of Bitcoin. For listed companies such as Tesla to, very high profile way, say, hey, I'm buying $1 billion worth of Bitcoin. To me, I attribute all of that to this July OCC ruling. Well, OCC is not done. January of this year, they said that, they use some weird terminology like INBNs, but essentially they mean blockchains, and specifically permissionless blockchains such as Bitcoin and Ethereum. They said that, well, lo and behold, chartered banks, your Citibanks, JP Morgans, et cetera, of the world, they can use stable coins to settle payments. That got this January ruling did not get nearly the attention that the July ruling last year did. But in my humble opinion, the long-term ramifications of this ruling are going to be massively bigger than the July thing. Simple reason. How often do you use payment systems versus how often do you buy and sell gold as a way to, diversify risk or hedge inflation, whatever, right? If Bitcoin is like gold, well, payments, stable coins are like, you swiping your credit card, or you, doing a debit out of your checking account. Everyone uses payments way more than, they manage their portfolio, right? And this January ruling is why, a few weeks back, Visa announced that they'll accept USDC, which is a stable coin used by CoinBase and Circle. They'll accept USDC to settle your credit card bill. What this means to me, my first reaction to this ruling was, wow, this is the ultimate US counter to what China is doing. Because number one, you're leveraging, right, the massive US dollar footprint that exists, which is between 40 to 50% of global payments, number one. But number two, you're leveraging the sort of coverage of permissionless systems, which is global, right? Which is, just by way of comparison, there's something like 20 to 30,000 nodes running on Ethereum, whereas the PBOC system has at most a few dozen nodes, right? So the PBOC, as it's already doing, is it's pushing the RMB and this DCEP payment system along its allied countries, right? You saw them sign a 25-year deal with Iran. They did something similar with Russia to say, hey, let's not use the US dollar, let's use the RMB, and let's use this, settlement system based on blockchain, right? Well, here you have the US Treasury saying, hey, you can not only use the US dollar, but you can enjoy essentially almost censorship-free or censorship-resistant at the minimum settlement technology called permissionless blockchains. So again, I haven't seen a very coherent account of all of this, but this is just my personal take on some regulatory directions from Washington in the last 6 to 9 months. Any questions, or feel free to disagree with what I'm saying, by the way.
So I'm looking forward to hear how you see this impacting the role for blockchain, especially, permissionless, whatever currencies in East Asia as we move forward. We'll come back to that, I'm sure.
We'll come back to that. But I think the question people should be asking themselves is, which system is ultimately more attractive to you as an end consumer, as a global company doing trade across, many borders? Which is more useful to you? Okay. And I think ultimately these market forces are going to determine who, quote unquote, wins. Moving on a little bit to, I think, some salient market developments, especially in the last 6 to 9 months. These public companies, even these financial institutions buying Bitcoin, I think that's a well-documented phenomenon. A few weeks ago, the largest exchange in the United States, the MaiCoin of America, if you like, called CoinBase, they went public on NASDAQ at a very rich valuation, I should add. What's interesting about Coinbase's business, if you look at their proportion of retail versus institutional, is that they started life as a retail-facing business, just like us, but in the last what is this? Again, 6 to 9 months. I think it's highly coincident with that OCC ruling last July. You see that institutional business has grown much faster as a proportion of their overall volume. In fact, they were the agent helping Tesla buy their Bitcoin. So Tesla bought their $1.5 billion worth of Bitcoin on Coinbase. Now, we haven't seen this yet in Taiwan or Asia more broadly, but I think it's just a matter of time. It's just when, not if. And I think it's on the back of this credibility of having institutional customers that Coinbase was able to successfully go public. I think the next shoe to drop is an ETF. So there have been applications with the SEC going back 5 or 6 years now, but things have gotten serious this year. All right. So about a month or two ago, Fidelity, which is one of the largest asset managers, mutual fund managers, if not the largest, they filed to do a Bitcoin ETF. And I don't know if he's confirmed yet, but the incoming chairman of the SEC is a gentleman named Gary Gensler. He spent the last 2 years teaching blockchain and cryptocurrencies at MIT. And so he'll have the most direct say over whether a Bitcoin ETF is approved in the United States. Canada has already approved one, and it's done extraordinarily well just in the last few months since it has been approved. So again, I think in the US, it's a matter of time. It's not if, I think it's a matter of when. And when that happens, needless to say, there'll be a large flow of savings into Bitcoin, and the price may not be where it is today. So we're anticipating all of this here in Asia, and we're, to the extent that we can, trying to ride Coinbase's coattails, perhaps even to a public listing. All right, so I wanted to highlight that institutional trend for you folks before moving on. You guys have any questions or comments on that?
We had a good couple of comments, Alex, about what's really slowing down the system. Is it really float management, or what are the things that are slowing things down? Also, Jerry Fuqua has mentioned that the underlying coin design challenge is really the blockchain trilemma, not just a dilemma. Optimizing decentralization versus security versus scalability. These are great comments, but I think let's go through your presentation first, and then we'll come back to general Q&A.
Sounds good. All right. I wanted to highlight one more topic before we hit the last topic, which is something known as STO, which is short for Security Token Offering. Security in the sense of stocks and bonds securities, so those things that are regulated by the SEC primarily. If we can offer them in token form, what are the benefits to be had? Let me see. So because of my own upbringing in California, I take environmental issues, in particular carbon pollution and the impact that has on our climate, seriously, and something that I've been exploring. It may be under the auspices of security token offerings, or it may not be. But in any case, it is an asset-backed token issuance. And in fact, I had a call with the Steyer Foundation just yesterday to flesh this idea out. So Tom Steyer is a Stanford alumnus. He's been very active in the environmental issues. I'll just verbally kind of describe this and see if it rings a bell with any of you folks, okay? There have been, over the last 2 to 3 decades, halting efforts to establish carbon exchanges around the world. At this point in time, the most established exchange is in the European Union. It's called the Emissions Trading System. And the US, in the 2007-2008 timeframe, was getting ready to do something similar. But with the collapse of the Copenhagen talks in 2009 that never got off the ground, the financial crisis in 2008 also played a role in that as well. All of those efforts were in the so-called compliance market, where certain jurisdictions have either a cap on total emissions and or a tax. So Europe has that. That's why they have the largest carbon market in the world. The US, California has that, but most of the US does not. And that's why California actually has the largest carbon market in the US, but it's still small by global standards. Okay, coming back to blockchain. What we're exploring with the Steyer Foundation, but also with some other partners around the world, is establishing a carbon exchange in the so-called voluntary carbon market. So companies, one after the other, I'll start with a prominent example of Apple. Apple, since 2017, has claimed to be carbon neutral on a operational perspective, from an operational point of view, which is, their headquarters in Cupertino. However much electricity they use, they have since 2017 offset that by building, solar farms in the Mojave Desert. Okay, but what they've committed to do by 2030, which is 9 years from now, is to make their entire supply chain carbon neutral. So when you buy a computer or a phone from them, they'll credibly claim that the emissions generated in the production process of that product has been offset in some way. That has created all sorts of pressures in their supply chain, not the least of which with TSMC here in Taiwan, which is a large supplier to Apple, to decarbonize their operations. So a huge source of demand in the voluntary market, and voluntary because no one from a regulatory standpoint has forced Apple to do this. Apple voluntarily committed to this. And you can say that their suppliers, quote unquote, voluntarily committed to this if they want to remain an Apple supplier, that is, right? So this is all in the voluntary market. That's on the demand side. How about the supply side? Well, you have independent project developers around the world. They can be doing reforestation. They could be doing wind farms. They can be doing carbon capture. They can sell their carbon credits, which of course have to be certified and found to be high quality. What we're proposing, so that's the background, and I'm not a carbon expert, and blockchain will do nothing for the integrity of carbon credits, which need to be solid, and blockchain is not going to do anything for ultimate demand, whether Apple and many other companies demand even more action. But what we can do, and this is where my efforts are focused, is in increasing the transparency and liquidity of the carbon trading itself. So carbon trading, whether it's in Europe in the compliance market or today in the voluntary market, especially in the voluntary market, it's a very opaque process. So when I fly back to California from time to time, I will buy wind farm credits generated from a farm here in Taiwan from a broker called South Pole, which is based in Switzerland. And, I can calculate how much my airplane seat accounts for in terms of emissions. A round trip back and forth from California is about 2 tons. And then I'll go to South Pole and I'll say, hey guys, I want to buy 2 tons of carbon credit from you. Can you give me a price? They'll give me some price, which for me is quite arbitrary. I don't know where that number comes from. And I'll say, okay, you know, it's usually 30 to 40 bucks. I'll pay that. That's not a very scalable way to conduct business, right? Contrast this now with the cryptocurrency markets, where Bitcoin trades across several hundred platforms, including ours, around the world, and usually with less than 1% price difference. And that's through completely uncoordinated action, uncoordinated other than the blockchain protocol itself, of course. The question that we should ask is, are we able to inject some of Bitcoin or blockchain's liquidity, which means price discovery as well as, you know, settlement dynamics, into the carbon market? And I believe the answer is yes. And I think the most easy place to start is in the voluntary market. So Apple and TSMC, they want to buy. Folks around the world that want to make money by selling carbon credits, they want to sell. If we conducted all of this in token forms, so like stable coins, you know, in this case, 1 ton of carbon credit is represented by 1 token, and they're traded on exchanges such as ours, they would naturally trade across borders because that's the nature of blockchain. And price differences would get arbitraged out. We would have cross-border buying and selling. For instance, we would try to convince Elon Musk to sell some of Tesla's carbon credits in this fashion. You know that Tesla, they usually on a per quarter basis, the difference between a loss-making and a profit-making quarter is their sale of emission credits, usually to automakers in Europe, because the compliance requires European automakers to buy offsets. Well, Elon, as you know, has been quite active in cryptocurrency markets. So could he be convinced to say, let me take some of Tesla's carbon credits, let me tokenize them and, you know, offer it to the highest bidder? I think Elon can be convinced, especially if the team that we assemble, hopefully Tom Steyer's foundation, is a credible one. And so that's where we're headed. And you know, buyers of Elon's credits, I shouldn't personalize it to Elon. Let me just say Tesla's credits. I mean, they can be reasonably convinced that Tesla has been vetted, right? That's the only reason they can sell into the European emissions market. So why wouldn't Apple or TSMC, for that matter, buy from Tesla? There's no reason they wouldn't. And the whole point of using crypto tokens to match you know, supply and demand is so that these orders can be fractionalized into very small pieces, and they can be, you know, collected from around the world. Okay, so anyways, that's what I'll say here around now, whether they're an STO or not, whether they're formally offered up as a security, that remains to be seen. They shouldn't be, because this is a straightforward asset-backed token. It's 1 ton of carbon credit equals 1 token. But down the road, the ultimate goal of having a carbon market is to stimulate more capital flows into this so that new carbon reducing projects can be funded. And oftentimes, because those are not built. So Tesla's carbon credits, they're based on existing cars on the road, which are presumably displacing fossil fuel cars. That delta is what allows Tesla to register for carbon credits and sell them to profit from them. What we want,
Alex, I'm sorry, go ahead.
No, what we want to see is more such projects, right? And by definition, they don't exist yet. So to offer funding for a non-existent project, that's a security. That's when you invest, basically, and that's what's governed by securities law. You can fundraise by issuing debt, or you can fundraise by issuing equity or selling equity. And so if that liquidity in an asset-backed carbon market can be essentially recapitulated in a securities market, I think we're onto something big. But then that requires the support of the regulators, which, as we all know, takes time to build. Go ahead with your question.
Yeah, so that was exactly where I was going. So here you are with a great idea. Do you have to convince the regulators first, or do you build up pressure from a number of people who want to do projects first? What's the way forward from here to there?
Sure. So I think the most likely step Well, I mean, in rank order, right? So let me use an electrical engineering analogy, right? What we want to see is a sort of step function in projects and activity around carbon reduction. And ultimately, a compliance market will be that step function. But hopefully, we don't have to wait until literally the sky catches fire for there to be a cap or like a carbon tax, right? I mean, with all due respect to President Biden's first 100 days, right? He's rebuilding infrastructure. He's doing all that great stuff, and he's trying to decarbonize the American economy. But not one mention, as far as I can tell, has been made of a carbon tax or a carbon cap. And that's just not politically feasible in the United States right now. But that's literally the step function that would need to happen for us to meet the sort of,
Okay. Real quick question from Chuck Lamb. Alex, what does the future of DeFi mean for an exchange like MaiCoin?
Yeah. Hey, Chuck. Man, it's been a while. So my opinion of DeFi is that it will
define it for everybody, please, real quick.
DeFi is short for decentralized finance, and so it's making use of permissionless blockchains such as Ethereum. You can write essentially what's called a decentralized application, and a DeFi application would be a financial application. So it could be a lending market, it could be an exchange, but basically it's permissionless. So anybody can publish such an application and in essence conduct their own line of financial activity without permission from a platform such as ours. We're a centralized finance. We're decentralized in the sense that we use permissionless protocols, but we run a permission platform. It's our website, it's our platform. We get to decide, which customers to take, which tokens to list, etc. There's a whole gamut. There's a whole spectrum of platforms that are more compliant to less compliant. I think DeFi will evacuate the center. So the center being centralized platforms that are less regulatory compliant. And there are a number out there. I won't cast aspersions, I won't name them, but I think anybody who's been in the industry would know which some of them are. They are exchanges that list like thousands of tokens, some of which, or most of which probably are very low quality. They are derivatives platform that offer like 100 times leverage, which is essentially gambling. And these are all no-nos under any reasonably regulated environment, right? The NASDAQ is not at liberty to list any company. Derivatives are tightly regulated by the CFTCs, et cetera, et cetera. So what DeFi offers is an opportunity for you to, run completely wild, right? If you want to offer 1,000 times leverage, write a D app and you're off and running. If you want to trade any manner of token, even fraudulent or even illegal, whatever, like underworld tokens, you're free to do so because it's a permissionless environment. So my opinion of what DeFi's long-term impact is going to be is it's going to continue to grow, but it's going to evacuate this middle ground where it's CeFi, you're centralized, right? You're a company deciding what people can and cannot do, but you're not very compliant. So MaiCoin, although we're just a regional operation, but we try to be compliant. I mean, if we weren't, we wouldn't be allowed to exist and run this 5-story shop across the street from the regulator, right? So it will basically be an evacuation to the extremes. You want the free for all, go to DeFi. If you want to be kind of regulated and sustainable, you accept regulation. Chuck, I hope that answers your question.
Okay, thanks, Alex. Why don't you go ahead?
Yeah, let me wrap up with this very quick intro to something called non-fungible tokens. So in the monetary world and even in the cryptocurrency world, every unit of value is theoretically fungible, meaning they're interchangeable. $1 is supposedly non-distinguishable from another dollar, one Bitcoin from another Bitcoin. There's a fairly easy technology way to make each token essentially unique and therefore non-fungible. right? And it's just writing a smart contract a certain way to say there's issuance number equals 1, and there's only one such token in the world. What's a good use for a non-fungible token? Well, it turns out that in the past, especially 6 to 9 months, this thing has gotten really hot. Artists have been issuing works of art as NFTs. Sports teams, sports leagues like the NBA have been issuing not just the digital analog of cards like baseball cards or basketball cards, but actually what they call moments. So my favorite moment is I think it was game 2 of the 1991 finals between the Bulls and the Lakers, and it's Michael Jordan's very famous move. Like he started flying one way and then midair turned the other way. It turns out Michael Jordan is an investor in Dapper Labs, which has been working with the NBA on this. And so that NFT has not been issued, but when it is, I predict a selling price of well over $100 million. And what gives me confidence there is because in recent months, these NFTs have been selling for exactly that kind of money. There was a digital artist named Beeple. He collected his digital works of art from the last 5,000 days. He produces one a day. He kind of made a collage of that, turned that into an NFT, and that sold at Christie's for $69 million about a month ago. Crazy, right? So if you think about anything else that can, that is of almost unique, or actually is of unique value that can be digitized. Now, let's draw the distinction between traditional forms of digitization and this form of digitalization. Traditional forms of digitalization, let's say music on iTunes, right? That's not unique. Apple maintains that they have essentially unlimited copies of whatever song that you're interested in listening to. And so it's hard to command value above and beyond, I guess, the sort of utility value of enjoying the song itself, right? If you're willing to pay whatever the price is, 99 cents for that song, well, you as the consumer, that's your price. If anything, there's sort of downward pressure because you have competitive streaming services like Spotify, right? That theoretically allows you to enjoy a lot of these songs almost for free. Whereas a unique item, right? It could be a work of art, it could be a bottle of wine, it could be owning, quote unquote, Michael Jordan's move, right? I can prove to you cryptographically that only one such item exists, but it's digital, so it's freely flowing on a blockchain. So ease of transfer, ease of proof of authenticity, and proof of ownership, and that comes with the territory. And so it offers all the essentially advantages of cryptocurrency, but at the same time, it injects a sort of, you can relate to this because these are sort of real world items that you believe has value. And a lot of the value is intangible, unlike, streaming a song. And so there's almost no limit. There's no ceiling to what these things could be bid at. So that's what's to, I think, explain a lot of the recent craze around NFTs. So it's something that we've begun to explore here in Taiwan and in Asia. Here's some stats about the growth. It's been quite amazing. Luxury brands like LV have gotten into the game. Let your imagination run wild. I mean, this NFT is just a technology for you to use. And so this company based in Taiwan, they have a project with the National Palace Museum here in Taiwan, which has a lot of priceless works from the Chinese-speaking world. And they're working with the National Palace Museum to digitize as NFTs some of the works of art there. Let me add that ultimately this comes down to intellectual property, right? Who owns the ultimate content? Well, it turns out in the museum case that the museum doesn't literally own the art piece. They're more like custodians for society, right? So oftentimes what is being done now is the museum will commission a third-party artist to create some sort of impressionistic version of the original art piece, which is public domain. This is now private domain. That authorized third party can then sell the work as an NFT. So I imagine not too long from now that the Louvre and the British Museum will probably get into this act as well. Anyways, so I can talk to you until I'm blue in the face about Bitcoin and monetary policy and politics and blah blah blah, and it may not mean a damn thing to you, but like if I tell you, hey, Michael Jordan or the Mona Lisa, maybe that begins to make sense for you. And it turns out all of that can be accommodated and helped along by this blockchain technology. I'll summarize by saying that Taiwan, per my original thesis to Bobby 8 years ago, it's a pretty Goldilocks place here in Asia to be doing what I'm doing. It's not too hot, not too cold. Even though we've had a kind of slow start compared to other parts of the world, especially mainland China, because of Taiwan's manufacturing and traditional mindset, but the reality now that we're getting into NFTs is that there are a lot of tangible assets that we can digitize. And, I actually think that going along with the tortoise versus hare analogy, I think, maybe it may very well be that like the fable, the tortoise maybe wins at the end of the day. As an individual who's been, putzing about here for the last 7 or 8 years, I think that going back to my days at Stanford, being able to not only see things, but actually, frankly, work both within the system, as a Stanford grad, it's hard to argue that I'm sort of this wild-eyed radical revolutionary, but, at the same time, harboring some alternative and non-mainstream views of the world so that you can understand and perhaps even commercially grasp new things that are going on, including cryptocurrencies. I mean, I will credit Stanford with that, and for that I'm eternally grateful. So, again, here we are, 20 odd years later. I'm really happy to kind of share the journey that I've kind of slogged through. To be perfectly honest with you, it's been really tough at times with MaiCoin, but I think 7 or 8 years into it, we're finally beginning to see the light of day. So with that, let me turn it back to you, Professor Dasher.
Okay, Alex, thanks very much for your frank and open comments. So there's one other aspect about Taiwan that I think is interesting here. You have picked something that is a very international business line. And in some ways, I think that's very appropriate for a market the size of Taiwan. Because if you have international, perspectives and can do business in a lot of different places, you don't really have to have that big of a domestic market.
Right, right.
I wonder if you see that the real upcoming challenges to Taiwan kind of as an ecosystem for this sort of development. Would it be someplace like Israel, or where would it be?
That's a great question. I think Israel is the gold standard in this regard. I mean, it's a nation of what, 6 million people, I think, and I don't know how many unicorns have come out of Israel. I mean, it's amazing. It's an amazing phenomenon. Closer to Taiwan, I think a comparison with Hong Kong and Singapore perhaps is in order. So, Hong Kong and Singapore, I mean, being former British colonies, they have common law and the English language firmly as a foundation. That's not something that Taiwan has. And that's why they are able to attract a lot of international businesses, especially in the financial sector. However, what's interesting, especially in my line of business, is that Hong Kong forbids any retail participation in cryptocurrency. So my business simply cannot exist in Hong Kong. You have to be a professional investor in order to invest in Hong Kong. Singapore is a little bit more permissive, but in typical Singapore fashion, it's highly circumscribed. So Singaporeans can take Singapore dollar and buy cryptocurrencies, but I think it's limited to 1,000 Sing dollar per day, right? So it's
relatively small amount. Yeah,
very small amount, right? So it's basically we're saying, you can partake, but only a little bit, right? You can only have an appetizer, you can't have a meal. Taiwan, for what it's worth, I mean, we have limits that are basically, for most people, more than enough to use. Okay. And as a population, it's 3 to 4 times larger. It's about the same size as Australia. Okay. So what I'm trying to say is, because we're allowed to conduct business fairly unfettered, and we have a larger domestic economy than either Hong Kong or Singapore, we've been able to grow the business to a scale that I think is hard to do in Hong Kong or Singapore itself. Now, if I were a global scale company looking to expand in Asia, I would probably set up headquarters in Hong Kong or Singapore and not Taiwan for linguistic and legal reasons, and tax reasons, I should add. I think the question.
Yeah, yes. Go ahead. No, finish up. Go ahead.
I think the question for me going forward is, okay, that's great. So we have some advantages and disadvantages compared to Hong Kong and Singapore. How do we play the hand going forward? Can we hit this one out of the park, as so many Israeli startups have done? That remains to be seen, to be perfectly honest. I mean, our business model up until now has relied on an understanding, a sensitivity toward, and you can say a mastery of certain regulatory aspects. And by almost definition, that's a pretty local activity, right? Now, we have a pretty decent scale business that allows us to now contemplate expansion. What Chuck brought up, DeFi, that has no natural geographic notion. And so can we fork off a DeFi project and hit it out of the park? Maybe. It's something I've been looking into. Lutex, the NFT company that I told you about, they've been talking to some game and content creators in Japan. Japan's a very target-rich environment as far as that's concerned. Can they successfully grow out of Taiwan? It's my sincerest hope, and that's where our efforts are directed. But it remains to be seen.
Okay, one more question, and then we'll close up the formal part of the meeting. And that is, okay, so you described your path since the beginning of Coin as, slogging through it. How do you spend your time now? And is it what you expected when you first started it?
Well, I don't do any real work now, right? I just, I try not to screw up. That's kind of the way I describe my job these days. Here I am doing the Ironman and, talking to some bank type people about listing in the US. So look, I mean, why I say this has been a slog, it's been, I have quite a bit more white hair than I used to, which is why I keep my hair short. It's been at times a perilous journey. Our industry is very prone to security, information security, like hacking. That's something that you always have to be on the guard for, because unlike banks and stock brokerages, which they have a website, of course, that you're able to transact with, but their real ledger lives offline, right? So if their website gets hacked, they have a very large air gap before you actually are able to write the master record in the ledger. That's not true in our industry. Our assets live online. And if they're able to penetrate the online platform, they can move assets, which is to say, steal money. And so, there's a lot under the hood there, is what I'm trying to say. It looks like a website, it looks like deposits and withdrawals, not unlike your bank website experience, but in reality, operating such a thing, dealing with the central bank, dealing with the financial regulator around money laundering, or specifically anti-money laundering, it's really a full-time job. So that's how I busy myself.
Yeah, okay. So I think we will call an end to the formal part of the program. Anybody who can stay, will have a more informal discussion from now. But for right now, I'm going to stop the recording. Alex, thank you so much for a really great presentation, really interesting account of where blockchain-based currencies and so forth are going from here in East Asia. Thanks.